Hello everyone. Today we'll be introducing a new package, FedCurve. It is used for analyzing implied Fed funds rates curve and how that has changed over the past. Specifically, we have an interactive chart and a data table. And what we can do with this is you can look at the chart and see how in different periods of time people think about what the Fed will do in their future meetings. Specifically, if we run scripts, um, here is the main function where the main functions are written. Here we call the main functions and we set the default parameters in meeting, the meetings we want to look at and look back date, and we retrieve the data and we plot the data. For example, the blue curve represents as of December 30th. This is what people expect the Fed funds rate will be on each of the future meetings. And the orange curve represents what people think the meetings will be 1 month earlier, so on November 29th. So you can see, for example, on the September meeting next year, people expect the expectation has dropped a lot over the past month, which could be following inflation expectation that mainly contributed to it. And what we can also do with this is we can drag the data, drag the dates, and see how the curve has changed over time. That's quite interesting. For example, we can explore it by looking at, say, this March 23 meeting. On what date? On October 21st. This seems like a weird drop in implied Fed funds rate. Let's explore it further. So here we have a specific function for exploring specific data points. We call this function check meeting, and we check the meeting on this specific date, October 21st, and we see that for this meeting on this date, the 3.25 strike has a weird price. It should not be lower than the previous. It should not be lower than the next meeting because it should be a non-decreasing step function. So we further look at that at the specific strike for that meeting on this date, and we see that the price is indeed correct. But the thing is that the spread has increased a lot, which means the market is not really liquid. There's a huge difference between the price at which you can buy and price at which you can sell. So we can't really arbitrage this kink in a curve because it's just because there's not a good price for that. So basically that's what you can do by playing with the meetings. You can see how the curve has changed over time. You can look at specific points in the history, or look at right now how many cuts are priced in towards the end of next year, for example. So for motivation of this project, basically I think a lot of traders in banks or in hedge funds that look at interest rate curves all the time, and it is important for both identifying trading opportunities and also understanding the market. Seeing how market thought 1 month ago is versus right now can convey a lot of value, and seeing how the yield curve is shaped right now versus 2 months ago can again convey a lot of value, and how I think, for example, inflation will be, how I think the Fed will do next year, and whether I think the market has adjusted fully. All these things can be interpreted just by looking at some plotting of the yield curves. On how specifically do I construct this on Kalshi, the basic idea is the specific strikes for each meeting can be viewed as a CDF, which can be converted to a PDF, which then can be converted into the implied rate for each meeting on each date. For the methods for how I organize my package, I have 3 main files: user.py, which contains your default username, password, and FedCurve.py, which is your main our main package. It contains all the function we have written, and finally we call this function in the main script, where we can do the plotting, do the visualization, explore the data, etc. Here in the functions in our FedCurve file, we have data retrieval, historical curve building, interactive plotting, and data exploration as our 4 main blocks. Under these, we have specific functions built for these. And finally, our main limitation is data retrieval speed, which can take up to a few minutes. But firstly, once we have retrieved the data, we don't really need to get it again. We can just do the plotting, do the visualization, and see how things change over time. And second is more a faster premier API access would dramatically speed up the data retrieval speed, which will help us alleviate a lot of time concerns. All right, so that is the end of the demonstration. Thank you for listening, and feel free to message me about anything related to this project. Those who are interested, I'm providing some further demonstration of the project. Here are the 3 files. In the user, you can set username, password, and you have to manually input the actual FOMC based on how well the news came out. So on December 22 contract, December 22, on this dates, the Fed announced they will move the Fed funds rate to 4.25 or 402.25 bips. So you have to manually input this if you want to correctly use the default meetings. Here I have all the functions written out with respective explanations. It might take a while to understand, but I am trying my best to explain clearly the logic and yeah. And finally, I have also provided code for testing output and debugging intermediate values, as well as the plotting function. And finally, for our main script, you can adjust some default parameters, which includes meeting and lookback. Here we use default meetings to be the most recently settled contract. For example, in our case, it's our December meeting, and all the unclosed contracts, which include all the meetings in 2023. But of course, you can change that if you only want to look at 2 meetings, September 23 and November 23. You can do that as well, as long as you provide more than 2. And you can also set a look back window. Default is 90 days, 3 months. You can also set it to only 30 days if you don't need that much data. Or if you want longer time, you can do like 180. Here we retrieve the data. Here we are plotting the data. Some interpretation, for example, you see that for the blue curve, right? We have some weird king throughout. Usually that's because, like for example, a king here that has not, you see, the June 23 king hasn't really moved across different dates. I think that is due to a lack of liquidity. There's not really much change in prices in yes bid and yes ask on the strong contract over many days, because lack of liquidity is a major issue on Kalshi, and we hope by more and more people using this tool, more and more people will be more interested in trading. As a result, improve the liquidity on the platform. But the fact that this has not changed over these days probably means that there's not a lot of trading or not a lot of interest in this contract, and as a result, the price has not really moved. So again, what this means is that even though sometimes you may see some dislocations, that doesn't necessarily mean you can execute it, take profit from that. But again, if you do see something and you explore it and you see there's nothing fundamental that's causing this kink. So if you see this as a 1-day thing on the current curve, for example, and there's the bid ask seems fine, then you can quickly take advantage of it by, for example, buying the yes. You think the rates will be higher because there shouldn't be a kink in this curve. So this allows you to really quickly visualize what's happening in the market to take advantage of this. Yeah, here these functions are for checking specific data points. So when you see a kink, why is it happening? you can run these functions and inputting the values. And yeah, so I've provided my GitHub repo. So in each one, I have a Jupyter Notebook file and a Python file. And you can download all of them, play with them, and see how they go. Thanks.